October 21st, and it's time for another weekly wrap up with the trading experts. Let's get right into it. All right, so this week was a bit of a nothing week. It was a bit of a consolidation week. Look at the weekly chart right here. We can tell just how tight the market was. Look at this $2 range in the SPY. So not much going on in the market. Earnings are starting to play out a bit. That's what we've been watching really. But overall, it's not a time to have heavy risk on in the market. When the market's trending higher, it's usually above its 8 and 21 day moving average on the daily chart. That's really a swing trading environment. That's when you want to have a ton of risk on. Right now, it's below that, so it's not really a time to have a ton of risk on. So we're just waiting for earnings to play out for the most part, waiting to see what happens of this tight little range we're in this week, whether we hold this support at the 212 area, rip higher, or fail and just break down for a move lower. So we're gonna look to the earnings, look at a bunch of Qs, see what we get out of it. But right now, we haven't been doing much this week. Some earnings names: Bank of America reported Monday. The banks have all been. Oh, that's not Bank of America. Hold on. There we go. There we go. That looks a bit more right. All these banks have been really strong lately, just ripping higher. Let's take a look across the board. Here's Bank of America. Here's Goldman Sachs, J.P. Morgan, Morgan Stanley. I mean, you can see all these charts. They're the ones holding the market up. They're the ones having us go higher and really having us not fail that 212 level and break down. So the financials have been very strong. They're not really the best trading vehicle because they're such slow movers and really thick stocks, but it's something you definitely have to take note of is the strength in these names. Let's talk about the king of the week. Fucking beast of all beasts, Netflix. We were talking about how after they gapped up $20 after their huge earnings beat, and it was a big beat, especially after two missed quarters. Let's look at that. Surprise six. It was a great earnings beat. Now, like most people, when we see this big huge gap up, we're not going to be able to take advantage of it because it's such a risky trade to even try to capture that. You know, you could buy once they announce earnings, you could buy this 105. It could be down at $90 faster than you can click any buttons. So we were waiting for this one to chill out, go sideways, hopefully, and give us an opportunity to get in. But as you can see, the best ones, they never. Let's look at a 15-minute chart. Jesus Christ, this thing just never stopped going up. This is 4 days ago. This is a $100 stock, $130 now. Pretty crazy. So that's definitely the leader. That definitely set the tone for all the tech earnings. What just reported today, and this should come as no surprise to everybody. Microsoft just beasting highs. This is the epitome of strength. This chart, we've been watching it. We've been trying to play this one. We had a feeling it might wait till earnings to really break out, but break out it did. I mean, if you have to risk your money on any earnings, I mean, these are the type of stocks that do it. These super strong tech names that have just been impenetrable, just will not sell off. Now, on the other side of it, IBM, they actually beat earnings, but horrible reaction. I didn't get to take too deep of a dive into these, but absolute dog. I mean, and look at this chart underneath all the moving averages. You would expect this one to not really beat earnings. Just looking at a chart. I'm not saying it's easy to tell whether they're going to beat or miss because of a chart, but just looking at this one, you can tell how weak they've been. And no matter what, the market goes up, market goes down. Domino's Pizza goes up. Good times, bad times. It seems like everyone's buying pizza. It's comical. They just keep beating earnings over and over again. Look at a 15-minute chart. They just gap and go every single time. Where we at? Where we at? The airlines. Airlines are next. Look at these guys. All pretty strong. They've all beaten earnings. Here's Continental, Delta. I mean, they've all been pretty beaten up. But it looks like with these earnings, they might be able to make a move higher. We're in this UAL right now, just holding it. We bought this breakout right here. Pretty tight risk. It could make a move higher. I don't have a ton of stock, so I'm not super excited about it. But yeah, Alaska Airlines, ripping, American Airlines, all the airline stocks have been pretty good. Let's take a trip over to healthcare land, United Health. Let's look at weekly here. I didn't know they ripped that much. Yeah, so here's another one, all-time highs. They're the strongest in the sector. Everything else much more beaten up. I'm very surprised to actually see them beat and have such a powerful move higher. I guess you could tell all the sector rotation, all the money is going into United Health in this sector, and you just take a trip around, type of all stocks, and that one's definitely looking the best. Just another earnings name that was on our radar. Actually, one of our members pointed us out to us. I forget who. Sorry, but I wanted to show you a quick lesson on this. This is what you really like to see in an earnings name. Now this is the daily chart, and I mean I think you can easily tell this little resistance level right here. All right, they got support around this area. I mean it's a sloppy chart, but you can see what we're looking at here. Now we look at a weekly chart, and it's much easier to see. Look at all this consolidation. That's a ton of consolidation. So if this is able to break higher, should be a great breakout. Now we look at the daily chart. Here's their big, oh, maybe zoom out one more. Here's their big earnings day. Big up day, but very sloppy, very taily chart. And now these next 2 days, all they've done is consolidate. If we look at, let's look at a 15-minute chart. And we'll go to a 30-minute, a little more clear. But you could see, it's just literally just consolidating. It's super tight. You could, so Monday comes around, you could definitely buy this 119 right here with a 117.50 stop, $1.50 risk, and your upside, if you catch this breakout, on that $1.50 risk, you could be looking at $5, $6, $7 trade there. It's solid risk reward. That's what you want to be in every time. When we talk about post earnings, bull flags, these are the kind of things we talk about. I mean, we would like to see it consolidate a lot more and go sideways. If we could have 5 more days of just these type of bars going sideways, that would make the probability of the trade success much, much higher. Those are the things we look for. But as momentum play, I mean, this looks like it really just wants to go. Had a nice almost inside day the day after earnings, right at this 119 level. Tries to gap down today and just hold support, rips right back up to that level. So, I mean, I wouldn't be surprised to see this one take off Monday. Another financial had great earnings this week. American Express, they've been beaten up over the past year or so, but this might be the earnings that gets them out of the hole. I was surprised by 28 cents on 96 cent estimate. I mean, that's a huge beat, 30%, not so bad. On the other side of the spectrum, and now would you be, we talk about charts don't lie. Would you be surprised that Verizon over here missed and they're getting killed? I mean, they're blaming it on the new iPhone sales aren't as good as they're coming in, but who knows with them. So they came out. They technically beat earnings, but these type of charts lead the reaction. Boom, dead, dead, dead. So should be no surprise there. Charts don't lie. These things are weak. People have been selling them forever. They would need something amazing to happen to get to really rip higher. Now let's check in on the beast of all beasts in the market, Apple. This is a fake tail. Wasn't that crazy? This did a bunch of nothing. Look at a weekly chart. This is just consolidating. This is one if you're in, you want to try to stay in. Don't get tailed out because this just looks like it's trying to just march higher. Our trade of the week this week was Home Depot short. It triggered, so we're in it light. Bennett's got this one. I don't have it, but we're in it light. We got in this day. We haven't really added. We're waiting to see like a feisty break of this 125 level. But right now it looks like it's holding support. So we wouldn't be surprised if we're stopped out of this one. No biggie. We had pretty tight risk on. We have 127.5 as our stop. But you see a gap down like this at support, bought up, likely means the stock's trying to go higher. So we wouldn't be surprised to take a loss in that one. Tight risk. We didn't really add heavy because it hasn't shown us that it really is as weak as we anticipated. So we're sitting light. We might take a small loss there. That's fine. We're sitting in this brew right now. Our buddy Papa Fresh got us in this one. We were talking about it today or yesterday. What it was 2 days ago maybe. Just a really tight chart. You see it. Beasts consolidates a bit, and then further beast. Now it's trying to consolidate and it's created a nice little descending channel / bull flag. This is what we like to see. We would stop around 18.5, 17.5 here. Every time I got down there, I've been watching this one the past few days. Every time I got down there, we'd see it hourly. It's pretty thin, but all the volume would come in at lows and rip it higher. That's where the volume came in around this 1750, 60. So that makes us think we got some buyers here. And if it wants to break out above this 1860 level, we will look to add, and that would be a very, very profitable trade for us. Let's see across the board. Oh God, awful, awful, awful. J&J, their earnings. They had a small. What did they have? Small beat? Yeah, they had a small beat, but earnings reaction was just terrible. I didn't really get to take a deep dive into these ones as well. I just saw they got crushed through the support level right here. This is the earnings day, and so now if you're looking at this chart, this is like an earnings trade we would love to put on. If you're looking at this chart and see these earnings, they try to rip up, and then if you have a chance to execute the short through support here on an earnings day, that makes your trade's probability much, much greater. And you'll see a ton of follow through if you have the earnings catalyst to go along with the technical aspect of the trade. So if you got short here with a stop, you get short, what's this level? 117. You have a stop 118 half, $1.50 risk. And look at it, it's all the way down to 113 now. So $4 to risk $1.50, and it's still going. That's a trade I take anytime. But overall, I mean, we're waiting for these earnings to play out and really give us a direction of the market. You know, the talking heads say we're going to 230. There's other talking heads that say we're going to 190. So I mean, be careful you listen to. Have a plan. Trade with a plan. Don't get yourself in trouble. Don't average down in losses. And you know, let's see if this support holds up. That's really what we're looking for in the market. So huge week for earnings next week as well. Got a bunch of big dogs. I believe Apple reports, among a bunch of others, Chipotle, ton of others. I'll check in throughout the weekend, see if any look good for a trade. We're gonna look through everything that's had earnings so far. Look for some post earnings bull flags. Those are our favorite charts by a landslide. Oh, let's get that boy out of here. So that's what we like to look for: post earnings bull flags. So we're gonna do a bunch of research Sunday, see what comes out of it. We'll talk to you guys Sunday. Looking for a trade of the week. All right, so keep it locked. Good luck. Happy trading. And see you soon.